Hello, Spark Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and I'm once again joined with my good friend Phil Weiss. Hey, Phil.
Hey, Kirk. Happy to be here today. It's
Glad to
Friday.
have
It's
you.
a good thing.
Happy Friday. It is a happy Friday. Yes, the week is over, and the debate is over, and the holiday week is just getting started. So, I don't know about you, but I don't know what took me so long, but it was about maybe 5, 6 years ago, and I actually realized that this is one of the 3 weeks of the year that are phenomenal because if July 4th happens on a Tuesday, Wednesday, or Thursday, the whole week is basically a vacation because you can't find people after, you can't find people before. So why not just take the whole week off because no one's doing anything anyway. And the same is true for Christmas and New Year's. So if you can get those lined up, you're in good shape. You're having a good year. Now, if it happens on a Monday or a Friday or the weekend, well, you're SOL. But for every 3 out of 7 years, you're in luck.
Yeah, I know on Tuesday, I'm not working at all because I'm taking my daughter to college orientation. And then I'm just meeting people like little bits. I'm not as big a fan when the holiday's in the middle of the week. It's a little bit, I don't know. I like it when it's closer to the weekend. It just makes it easier to schedule other stuff. But it is going to be a light week. That's for sure. And that's always welcome, especially when the weather's nice so you can get outside.
Yeah, I mean, frankly, I think they totally screwed up with Juneteenth because Juneteenth's a floating holiday. They should have done it on a Monday. Why couldn't they pick a better number? Like, why Juneteenth, right? I know some people would be offended by that comment, but anyway, but if you think about it, like we've got all these floating holidays. Most of them are on Monday. Even the floating ones are observed on a Monday, which makes it easy because people have a long weekend. I mean, Juneteenth was on a Wednesday. I mean, it's a relatively new holiday, so it just came upon me. It was like Wednesday. I'm like, great, and go to work. I'm like, why aren't the markets open? I'm like, oh crap, it's a holiday. Like, why didn't I plan for this? Why didn't I take the day off? My wife went with the kids to the beach. I'm like, God damn it, I should have been there.
It's so funny you say that about the market because I remember that day. I was sitting there working, and I always have Yahoo open, and occasionally, a couple times a day, I'll just check to see what the market's doing during the day. And I looked at it; it hadn't moved. I'm like, that can't be right. And I refreshed my screen, and it says the same thing. Like, oh yeah, the market was closed today. I totally forgot till I was like in the middle of the afternoon.
I had a client call me. They're like, I put in a trade and it's not going through. I don't understand what's going on. I'm like, because the market's closed. Oh, I mean, no, people still haven't like gotten bought into the new. I mean, I love the fact it's a holiday. More days off, the better. We'll become Europe eventually. It's like, like a half the month will be a day off. It'll be great. It can all become Europe, for better or worse. But anyway, it's good. It's especially in the summer, people take off. They can at least appreciate the holidays. I think a lot of people don't really appreciate what the holidays are for anymore. They just appreciate the fact it's a day off. If you say, well, what's July 4th? Well, it's July 4th. It's firework day. Like they don't know what it's about, and Memorial Day and Labor Day, and people are just like, yeah, whatever, it's day off. And so, I think we should all kind of respect the fact that it's there for a reason, and maybe President's Day. I'm not sure I respect the President's Day holiday because I wasn't around when the presidents were respectable because they certainly aren't now. I'm waiting for AI president. Maybe I'll start respecting him again, or maybe not. But anyway, when Skynet takes over. So let's kind of dive right in here. I want to start off with a funny set of images because somebody sent this to me, and I just have to share because that's the kind of guy I am. So if you're only listening to this, you're going to miss out. So, all right, here's the first images I want to share. So here's a box of Fruit Loops, and basically this is something I've known for a long time, but I wanted to share just because it's just so obnoxious that if you don't know about this, you should. So here's a box of Fruit Loops. In the U.S., they've got a bunch of red number 40 dyes, yellow 5, blue 1, yellow 6. In Canada, they actually use real stuff. They don't use chemicals. They use carrot juice, turmeric, watermelon juice, blueberry juice, huato juice, and two other things I don't know, but I'm sure they're real. I brought this up, and this person actually sent this to me because I brought up that I believe The U.S. is the only country in the world, maybe one other, but I think the only country in the world that uses corn syrup in Coca-Cola. Every other country uses actual sugar. Sugar is actually better for you than corn syrup. Sugar is actually more of a natural thing. Corn syrup is like, industrialized thing that they throw in everything. Um, Point being is, if you drink Coke in another country, it actually tastes good. Like it's a little different here. Here's another one: Pop-Tarts. Red number 40, yellow 6, blue 1. In Germany, beetroot juice, carrot juice, paprika extract. I mean, in these other countries, they actually use real ingredients. Here's another one: Doritos. Red 40, blue 1, yellow 5. In England, it uses I don't know what the hell that is. But anyway, the point being that Doritos are probably still made with obnoxious chemicals. Anyway, point I'm trying to make is that frequently what we think we know is not so. Same thing with the market, right? Is you get this narrative of the way things are, and in reality, why are we eating garbage foods? Why are we eating food that's not even food, right? It's just a bunch of chemicals and sugar. We're going into a holiday where people typically celebrate the holiday by eating barbecue, hot dogs, burgers, all the stuff that's bad for you. Have at it. But I think it probably makes sense to understand what you're eating, and this is not a health show, but understand what you're investing in. It's the same thing. Like, you have to understand that our brains are pattern recognition systems, and we're looking for patterns. So we're looking for shortcuts. Our brain likes shortcuts. Our brain uses what, like 40% of the glucose in our body goes to our brain. So our brain is trying to conserve energy. It uses so much of it as trying to conserve energy. One way it does that is by pattern recognition. Another way it does it is by creating shortcuts. So if you give somebody 10 steps, they're going to look at 1, they're going to look at 10 and say, all right, how can I shorten this distance? They're going to skip 2 through 9. Now, 2 through 9 might be really important, but because people like shortcuts, they're going to ignore those and they're just going to do the bare essentials and get by. So when you're investing, your brain does the same thing. Looking for patterns, it's looking for shortcuts, and frankly, the news does a great job, the corporate media does a great job of putting out shortcuts. Oh, here's a trick. You do this. It's not a good idea, but they're going to give it to you because it makes sense and it hits that dopamine center in your brain, which makes you feel good, and you're like, all right, I'm going to try this. And you can end up losing money. You have to, when you're investing, you have to do the work. And I always go back to this joke that a buddy of mine told me a long time ago. The way Wall Street works is there's one guy in an office doing all the work. And for those reference, that was Phil. There's one guy in the office doing all the work. There's another guy who knows that guy who did the work. Then the next guy knows the guy who knows the guy who did the work. Another guy knows the guy who knows the guy who did the work. And everyone else hears it at a cocktail party. That's how Wall Street works. There's really just one guy in a room doing the work, and that guy's Phil. Or in the case of 2008, there was one Asian guy who developed the algorithms that when they found out they didn't work, it imploded the system. It's not his fault. It's Wall Street's fault. But that's how it works, right? Like, this one really smart guy came up with this. I don't know the guy's name. That's why I'm calling him the Asian guy. I know he's Asian, but I don't know his name. But he's a really smart guy, came in and developed this algorithm, and Wall Street's like, this is awesome. And they weren't smart enough to know that this algorithm had a flaw. And the flaw was real estate doesn't always go up. But anyway, so Wall Street saw it. They're like, this is brilliant. Let's put it in everything. And let's just sell it to the public. And they did. And what happened? The whole street blew up. So you have to understand, if you're not the one doing the work, you're subservient to other people's expertise. And if they have a flaw and you don't know about it, well, you could screw yourself. So the way to think about investing is do the work. Do your homework. I know it's tough. I know it's hard work. I know it doesn't pay off right now, because what pays off is all tech all the time, mega cap tech. That's all you need. Actually, this year you only need one stock, but the rest of them you can invest in those too, just for diversification's sake. But realistically, just understand that if you're not doing the work, you're setting yourself up for failure.
Did you miss your opportunity to get PPP money during COVID? Are you waiting for our president to forgive your student loans? Are you excited about helicopter money? Me too. If you want free money, look no further. I'm giving away free money this week on our show. All I ask is 5 or 10 minutes of your time. I'm so excited to give you free money, I can hardly contain myself. Take advantage of me and my excitement to get your free money. Go to www.moneytreepodcast.com/free money. Follow the instructions today and get your free money.
So, Phil, what are your thoughts?
So I know this isn't a food show, but I have to expand on a little bit. So, there is one time a year that Coke has sugar in it because when it's Passover, many Jews don't have corn. So in order to be able to sell Coke, Coke goes back to the original formula, which didn't have corn syrup in it, and they sell Coke that has regular sugar in it because that way those that are observing Passover can still drink it. But what happens is a lot of people, you're talking about the taste, they still appreciate the taste. So it's not just the Jews that buy Coke when Passover comes. It's everybody because they remember what it tastes like and they want the real one instead of the one with the corn syrup. The other thing is that my wife has family that lives in the UK. And another thing where the US, there's all the stuff about trans fats, hydrogenated oils. We have those. A lot of places in Europe don't. So when we go visit family in the UK, we want to buy chocolate because the chocolate doesn't have trans fats in it. It tastes different. It tastes better. So I would be willing to bet that cereal box, the Fruit Loops and those other products that you showed, I'm sure they taste better too because they have real things in them instead of all these artificial constructs. And it is such a great tie-in to investing because it's about knowing what you're investing in, knowing what you're eating, right? That's the same thing. You have to look underneath. You can't just say buy by the label. You have to understand what it is that's underneath. You want to do some research. You want to make sure that you have an understanding of what you're buying. We can buy mutual funds and they have different names. Like I know I don't do this a lot, but if you think about like ESG investing, environmental and the socially responsible investing, and you look and say, oh, this is a green ETF. And then look at what it owns. And it's got Exxon or Chevron or both or whatever. It's really not. It's just, they may have something that's a little bit cleaner. Maybe they have enough natural gas to be considered clean. But when you look underneath, it's very different than what the name says. So it's important whether you're looking at individual stocks or you're looking at ETFs or mutual funds, understand what they own. Take a look under the hood. Don't just accept it on the surface.
Yeah, and one more food thing. I feel like we're going to be talking. This is going to turn into a food show or an episode, food episode. We'll have to keep it short today. I love podcasts, and obviously people listen here love podcasts because you listen to this one. But I love the long form content, and I found a show, and I was listening to this guy. His name is Dr. Datis Kazakian or Kazarian. Just Dr. K, I think people refer to him as. Anyway, so he was talking about, I've always had an interest in like food and how it reacts to people. And so I found the show and he said something that was really interesting. I've kind of superficially known this, but he really put a point in it. He said and I'm going to misquote him, but that the wheat in this country is hybridized. So I didn't know that Jews couldn't have corn and Passover, which is interesting. But the hybridization of wheat, so basically what happened, if you go over, and I've noticed this, like I was over in Italy when I was in college and I'd have pasta all the time and no problem. I actually lost weight in Italy. I'd have tons of pasta, have tons of sandwiches, like lots of wheat, no problem. I lost weight. Come home, pasta tastes different. And I actually react to the pasta here. So I don't even eat gluten here because it's a problem. However, I could have gluten over in Europe and it wasn't a problem. So what he said is that there have been studies, and he's a doctor, he's a researcher, so he's referring to all these studies, not just, some kook in left field who's just making stuff up. And according to certain studies, there's high correlation to people from 70 years ago and what they're doing today. Well, apparently there's a theory with a lot of evidence behind it that the wheat, the gluten protein has been hybridized. It's actually a different protein. So what we've been eating for hundreds of years is actually a different protein now than it was, which is causing people a lot of problems. You go over in Europe, they don't have these problems. So like I drink a Guinness here, it tastes different than the Guinness I drink in Ireland. And the pasta I eat in Italy is different than the pasta I eat here. And if you've ever been to Italy, you don't see any overweight people in Italy. They eat tons of pasta, right? I didn't see any. The only overweight people I saw in Italy were Americans. And you come to the U.S. and the Italians that come here, they're overweight, but they weren't overweight in Italy. So I'm not characterized Italians, but like there's something more than the genetics, right? It's not just, oh, they're big boned. It's like, well, why are the same people with the same genetics? One's really skinny, one's really heavy. Like there's more to that. So I've always been fascinated with this, and I expect a lawsuit, a cease and desist order from General Mills now after this show. But and I'm not giving medical advice. I want to give my disclaimer so we don't get sued. No medical advice or food advice. But from my personal experience, this is what I've experienced, and I find it fascinating because you start to discover all of the things that are whitewashed in corporate America that are not explicitly stated. They're just trying to meet a need, and we as people are bad consumers. We don't read the labels. We don't care. We're just like, we want the quick fix, and we don't bother putting the effort in. And it takes effort. I'll tell you, just from having food issues, it takes effort. But the segue really is how you do one thing is how you do everything. I spend a lot of time with my food because I have to, because I have food sensitivities or allergies, whatever. So I spend a lot of time with it. And I really am careful about what I eat. And when it comes to investing, you have to do the same thing. So that's the natural segue is if you're spending enough time with investments, spend the time with what you're eating, your body is, for me, like your brain health means everything. People have different issues, but you got to take care of yourself. So I do want to, have a good time over the Independence Day, but obviously, take care of yourself as well. Now I'm going to share an image because we talked about gold, I think it was last week, and got some images we didn't share. I want to talk a little bit about gold because gold is something that's actually started to take off recently, as have silver. Silver has started to show that it's got some legs. I want to share this annual gold reserves from other countries. I can't remember if I showed this last week, so I'm showing it again. There's a lot of gold being sold by like the GLD ETF. People have been selling it for the last bunch of years. I think since 2017 or 19, if I'm not correct. But people have been selling it up, buying it. The number of shares have been declining. However, central banks around the world have been buying it. So this is for central banks. Central banks in these countries have been buying it. Why? Because it's real money, right? And I know gold bugs are going to cheer and everyone else is going to jeer, but the reality is people still value gold. So what's more important is other countries value gold. Even if we don't, that doesn't matter. And here's a takeaway. What you think doesn't matter. I know we get all caught up by what we think and what we think is correct, and that's really your ego talking. In reality, what we think doesn't matter because the market doesn't care what you think. Central banks don't care what you think. Sometimes you'd be lucky if your family cares what you think. But if you're really thinking about it properly, what you think doesn't matter. What matters is what the market thinks. What matters is what the macro perspective thinks. So what matters is China really likes gold. India, Turkey, Poland, Singapore really like gold. This is the change in gold reserves, not the total. They're acquiring gold. A lot of other countries are acquiring gold. They saw what happened to Russia. We tried to bounce them out of the global economy, and of course, no one seemed to care. Russia kept plugging along. The economy is just fine. So gold is really important. I'm going to share this really briefly, just so that we said we shared it. But realistically, this is silver supply and demand. I don't want to get caught up in the weeds because this will bore people. But I would look at these things so you get a sense of like silver is an industrial metal as well as a precious metal. The industrial part's really important. So you want to watch for the supply and demand of the industrial. You can see the change over time. But you want to know these numbers. What's the trend? Are more people buying or more people selling? And what is the production? Right? There's a certain amount of silver out there. So if there's 1 million ounces of silver and next year there's 2 million ounces of demand, well, that's great. But if there's 500,000 ounces of demand, well, that's bad, right? So you need to know the supply and demand part. And I also want to share this one about gold and gold miners, which I will tell you, if you're looking at investing in gold, people say, oh, well, miners are like gold on steroids. Yes, they are. Good and bad. Steroids on the good side and steroids on the bad side. You can have a heart attack if you do too much steroids. So as somebody I know used to say, his mining portfolio would look like a medieval battlefield at dusk. in the bad times, like just blood and bodies everywhere. It's just horrendous. So, if you look at, 100 years ago, 50 years ago, mining stocks actually paid good dividends. There were different businesses. Now they're just speculative adrenaline shots. People really are not investing in them because they've been out of favor for a long time. But if gold starts to take off, which I expect it probably will, silver the same, it should continue. The trend should be up, especially with everything going on. So just keep in mind that these are real assets and real asset classes that you should consider for your portfolio. Don't invest in mining lightly. It is one of the most volatile assets on the planet and one of the hardest to predict. The only thing more so is crypto. So I would not go into that lightly. Frankly, I don't think most people should. I think the easiest way to do it is just invest in the metal, gold and silver, precious metals. The trend should continue to be higher. I expect the trend to go up. It goes up and then it goes flatline, goes up and flatline. It's not like it did in the early aughts, where it just pretty much from 2001 to 2011 just kind of went basically diagonal line up. It's not necessarily going to do that, but you should be mindful of the fact that it is an asset class. Commodities are also an asset class, Phil, aren't they? Do you remember a time where commodities were considered an asset class? Is that still a thing?
I do remember that. It's funny. You were talking about the gold miners. I used to be in another commodity that you didn't mention. It's oil or natural gas, right? I used to cover the companies that produce that. And one of the things that I think applies to the gold miners too is you want to pay attention to their cost structure more than anything else, because they don't set the price of what they're selling. And in the gold, with gold, the metals, I think it's even worse than in the oil industry. The miners are really tough to invest in because there's much more of a boom and bust kind of mentality from when I've looked at those companies as an investment than you have with the oil companies. And so they can get, when prices start to rise, it's a commodity, right? Well, demand goes up and they want to mine more and more gold. And what does that do? It eventually puts them to where prices fall because now there's too much. And they just don't have a great ability. They increase production at the wrong time. They decrease production at the wrong time. It's a really tough industry. If you're going to do that, I think, as you said, I want to stick with the metals themselves. I'd rather work with them than work with the miners, because it's really hard. I know some of those companies have been around a long time, but they're not great investments and their management teams are not usually very good.
Yeah. Yeah, it's definitely a tough asset. I personally like the royalty companies, because one of the downsides of commodity companies is that you're basically taking a fixed amount of the asset and you're pulling it out of the ground, you're selling it, and eventually your asset's worthless, right? So you own a mine, right? You own a hole in the ground, you pull all the metal out, you have no metal left. Well, the land's worthless, right? You just got this hole in the ground. So I think the thing to understand is, like, if you own Johnson Johnson or Apple or whoever, right? If you own these companies, they're building new products every year, right? It costs a certain amount to make it, and they sell it for another amount, and they constantly make more stuff, right? Like, they're not going to run out of stuff. Yeah, you could technically run out of materials, but not in anybody's lifetime. So as a company, I mean, Warren Buffett he's done a very poor job in the last 10 years, but prior to that, he did a great job of finding companies that are not capital intensive, right? Capital light businesses. And royalty companies are one of those. It's basically a bank. It's basically a finance company. They say, hey, we're going to give you $100 million and you're going to sell, gold's trading at 1,000. You're going to give us gold for $500 an ounce. Right, and they're gonna take out the gold at a price, so they make, like, I'm just making these numbers up. They're making like 14% a year on the deal. Plus, they're also getting gold at a discount. So it turns into these like profit centers, and they have very few employees because it's basically they're not pulling gold out of the ground; they're just financing it, and it's a different model that's used for that industry. The royalty model, actually, I've seen it a few other places, and it's always a very profitable endeavor. I saw one for a pharma company. They basically had a royalty or IP on a certain drug, and all they had was they had like 5 employees in an office, and they were all patent attorneys, that were there to defend their own patent. And their job was basically to make sure these companies just paid them. That was it. Like they were just cashing checks. And these people were on staff in case somebody said, well, we don't believe this. We're like, no, you got to follow the rules. That was their entire job. Is just make sure they ran out the contract. So if you find these companies, they can be great businesses and great investments because they require very little in capital to actually grow the company. Or in this case, the pharma royalty company, they weren't growing the company. The company was basically had one contract and was running out in 10 years. And you were basically looking at the cash flow and saying, well, they're going to keep paying. And I'm getting like a 20%, at the time, it was like a 20% return a year on this company because eventually it'd be worth zero, but they were paying out dividends of like 30% a year, but 10% of that was the company price. So it's just like over time it would go to zero, but you were giving like a 20% dividend. And it was crazy. So you can find that stuff. It exists. You have to look though. It's not going to appear in mega cap stock land. It's not going to show up in like, CNBC's top stocks of the week or Jim Cramer's stocks. It's not going to show up there. You have to do some research, but they're out there, right? And if you can find them, they're not easy to find, but if you find them, you can make a lot of money. And Warren Buffett always says he could make, 50, 100% returns a year if he had a much smaller pool of cash. But because he's got tens of billions of dollars, he's limited in what he can invest in to move the needle. But if you have like $100 million, you're putting $1 million to work and it makes 100% a year. Well, there's a lot of things you put $1 million into. And so, I would have loved to have seen him like create AI Warren and go out and find me some small cap stocks that meet my criteria. That would be an excellent experiment. Somebody should do that. I'm not doing it because I'm not buying into the AI thing at the moment. I think it's going to take longer than people think to change the world. But somebody will do it. I guarantee someone will go out there and be like, that's a good idea. Let me do that. So, it's interesting, but I would just say that if you're looking for businesses, look for capital light businesses that don't, like McDonald's is a great business. I mean, here's a question for the audience. How many of you think that McDonald's is about having a little store that people buy burgers out of? That's not McDonald's business model. McDonald's is in the royalty business. They're in the real estate business. They are not in the selling burger business. Most people don't realize that. The franchisees are. McDonald's makes money through franchise royalty payments, and they make money through real estate. That's how they make almost all their money. And people don't know that, right? It's a great business. That's why McDonald's has been such a great business. That's why it's expensive. Coca-Cola, sugar water. I mean, how hard is that? So, but just when you're investing, look for great business models that you can get at a what does Warren say? He used to look for average businesses at a great price. Now he looks for great businesses at an average price. Maybe that was a Charlie Munger quote, but much better to look for great businesses at an average price than average business at a great price. So we're probably going to end early here. So any other kind of thoughts or ideas here, Phil, before we kind of take it home? I want to share one more chart, but you're the fundamental guy. So what are your thoughts on all that?
I mean, I mentioned to you before, the bond market just looks different. It looks so different if we think about what we've been through for the past several years when we had zero interest rates, and now all of a sudden, not all of a sudden because it's been over a year, but now you have interest rates on treasuries that are 1-year treasuries are paying 5%. And we often say to people that you have to, one of the reasons to invest is because you want to stay ahead of inflation. And if we think of where inflation is right now, and inflation's between 2 and 3%, and if you add even if you add in GDP growth, which I think the last print was like 2.7, so you're between 4 and 5%, or maybe around there.
Above 5, I'm sure.
Get a 5. I can get a little over 5% on a 1-year treasury. So the bond market, I know some people might get disappointed about 5% growth, especially when we see what the market's done. But if you need income and you want to have not have all your eggs in the stock market basket, the bond market is so much more attractive than it's been in the past. In the past, going back to the decade of the teens, right? And you've got the fact that you can get real returns from it. And it also, to me, indicates that at some point, I don't know exactly when that's going to be, because with the economy having decent growth, the Fed doesn't want the economy to overheat. But it does mean that rates at some point have to come down, because it's not normal to have yields greater than inflation. And when that happens, you're going to get a little bit of an extra benefit from your bonds, because when interest rates fall, bond prices go up. So it's a really interesting time, and bonds are a much more attractive investment right now. And I'm using treasuries because they're safe and they're simple.
Yeah, I mean, I have to say, I mean, treasuries. It's been boggling my mind at how little people are respecting treasuries. I mean, for the longest time, treasuries on the short end have been getting the best yield, better than corporates, better than. I mean, I think agencies are a little bit better, but and some CDs are better, but some of those are just loss leaders. But they're getting great rates, and you have virtually no risk.
Yeah.
I mean, as low. I mean, if you look at the risk spectrum, it's almost as low as you can get on the risk spectrum, and they call it the risk-free rate for a reason. It's nothing is risk-free, but if you had to call something risk-free, it would be them, and yet they're getting a higher yield than other things. It's been weird.
Very weird. And I know you mentioned agencies, and you're right, the rates on those are a little bit higher, but the one thing you have with agencies you don't have with treasuries. I went out 2 or 3 years on some agencies that I tried to purchase, and then they got called, and I was really surprised because I didn't expect them to be called with such a short shelf life, but they did. And treasuries aren't going to be called, so you don't have to worry about what they call call risk, which is the chance your bond's going to be taken away from you. And you can kind of lock in your return. If I buy a treasury that's got a 5.1% yield to maturity, I know if I hold it to maturity, I'm going to earn 5.1%. You got safety. For clients, I have really stopped using ETFs for fixed income at all. And I'm just trying to focus on building treasury ladders, using treasuries with different maturities to fill up that part of their portfolio, because I think they're safe and I kind of know what kind of return I'm going to get.
Yeah. Yeah, it's a great thing to consider. We've been talking about this on the show for like, I don't know, the past year, when treasuries were attractive, and they're still attractive, and the yield curve's still inverted, and all the things that are crazy going on in this world, but that's the reality. And maybe at some point things will change. People have been speculating, well, they're going to have one rate drop by the end of the year, maybe two. I still think we'd be lucky if we have one. I think we're going to have zero. We may have one as a consolation prize. But some people are thinking, oh, we're going to drop one in like October or September. I'm like, they're not going to drop it right before the election. That's like the antithesis of everything that they stand for, which is we don't want to influence elections. Now, do they? Yeah, sure they do. But they don't want to be perceived that way, because that puts them in a different category with the politicians. They don't want to make an enemy of different parties, right? It's like, who was it? Bush, who got mad because, who was it? Was it Bush that got mad because they changed the interest rates right before the election, and you get all mad? I can't remember. Anyway, but they don't want to influence elections, and doing that might. So could they after the election? Because I think there's a Fed meeting right in November, right after the election. So they might do it then. They're probably not going to do it in December, because it's just they don't generally do that. But November, maybe. That would be the only time I would say it might happen. But I'm not seeing any signs that they need to. They don't need to. They have 5.3, 5.4% on the short end of the U.S. Treasury curve. And we have, what would you say? We have 3.3 CPI. Is that what it is, Phil? 3.4?
I thought that it was a little under 3.
I couldn't remember. I didn't look at the most recent one.
2.7 or 2.8, but I could be wrong.
Let's see. It says 3. Maybe I'm looking at the wrong one. It said 3.25. So, well, anyway. I'll get it in a second. But anyway, so if you're looking at, yeah, I mean, this one says 3.2, but anyway, doesn't matter. It's not back to 2, which is where they want it. And So if you have an inflation rate, which is, let's call it 3 for round numbers, and you have a U.S. Treasuries at 5, you're basically making 2% over inflation. That's wonderful. That's great. Now you're not making 15%, but you know what? You're making more than inflation at a risk-free rate, right?
Yeah.
You can't, that's not a bad deal. Not saying you should go do that, saying it's not a bad deal, right? That's easy money. You're making money over an inflation. That hasn't happened for like 20 years. So,
Yeah, exactly.
it wasn't really possible for a long time, but now you're able to do that. Now the problem is inflation backed up for like the last 3 years, which you might have gotten like whatever it was 25% inflation over the last 3 years, and you're just catching up with treasuries. So you got a long way to go, but in a year by year basis, you're able to do that. And so, will they lower rates? Maybe, but if they do it, it's more of a consolation prize. There's no reason for them to lower rates. I think there's more of a reason to raise rates than there is to lower. Now, I'm not saying they won't lower because I think that some of this is based on politics, and I think they're not going to do anything with the rates. But without a recession, without really bad signaling, there's no reason for them to lower them. If anything, they'll raise them. I don't think they'll raise them because I just at this point, maybe earlier we could have, but right now I think the inflation's kind of moderating, so there's no real immediate risk of it taken off. So I don't think they need to raise them. That's why I think they're just going to stay where they are. I've made this claim before. We're going to stay where we are, a lot higher, a lot longer than most people think. And that's part of the problem. That's why we're getting these mispricings. People don't think that what's happening is actually going to happen. So anyway, we're going to wrap it up early. I'm going to go celebrate Independence Day. Phil, wrap it up here, and where can people find more about you?
Sure. I want to wish everybody a very happy Independence Day. I know that experiencing big life transitions can be stressful. My job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. If you'd like to learn more about us, you can download our free ebook, How to Flourish Through Life's Big Changes, at apprisewealth.com/ebook. You can also sign up for our blog. Thanks for having me today, Kirk. And the one thing we are also looking forward to for Independence Day is tomorrow. It's a little early, but my daughter graduated high school this May, and we are having her graduation party. So we're going to have a bunch of people over tomorrow.
Congratulations. Good for you, man. It's always a good and a bad thing. You get graduations. It's such a happy occurrence. It's like, oh, but they're getting older.
Yeah, exactly.
It's sad. I miss those times.
Yeah.
Yeah, we're going through all that now too. So, but congratulations to your new daughter on that. And yeah, happy Independence Day, everybody. Hopefully everybody enjoys it. You do something fun, spend time with the family, stop working, enjoy the outdoors. We've had beautiful weather in this past month. Hopefully that continues. So
that's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name's Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on this show. You can also check out our show at Money Tree Investing Podcast. On our website, you'll have access to the show notes, resources, and the archive shows. Please remember to subscribe on our YouTube channel for immediate access to the new shows when they're released. When you subscribe to the show, it allows us to get access to some of the top minds of investing in personal finance. While you're here, please leave a comment and question if you want us to address it on the show. Have a great week ahead, and remember, no one will care about your money like you do, so invest in your life.